I want to bring in Kevin Burkett. He is a portfolio manager at Burkett Asset Management. Kevin, thank you so much for joining me from Victoria, BC. Nvidia, I mean, there's just no denying the power of it. What was your takeaway from what you've seen? Because, I mean, we haven't seen this, right? And in some ways, we're watching history unfold in terms of the gains and the market opportunity for Nvidia.
Yeah, well, good afternoon, Amber. So, you're right. U.S., European, Japanese equity markets all setting new highs on the Nvidia results that came late yesterday. Canada performed well too, but still hasn't fully recovered to the peak seen in late 2021. So there's an interesting divergence there, I think, all because AI just massively outperforming and driving tech-oriented markets. And in particular, what I mean is mostly U.S. markets. And so at this moment, I think the biggest question is, there's tons of optimism around AI, but is there enough optimism? And so with Nvidia being, call it, the bellwether name that everyone follows to get a sense of momentum there, that certainly stoked markets, and we saw that unfold when markets opened this morning and then really all day.
But you don't own it, and I'm curious as to why that is and how you play AI then if it's not through Nvidia.
Yeah, you're right. So, Nvidia's results, I mean, they greatly exceeded expectations, somewhat unusual to see a beat, but also a backdrop of huge optimism and then a move to the degree we saw today. So we'll see what happens tomorrow. I think for us, the worry isn't, so we're not opposed to AI as a theme. I think my worries on Nvidia maybe is that Nvidia and maybe the chipmaker space itself is just a little bit too obvious. For a long time, chips were seen as sort of like a commodities product. And so you have this global geopolitical theme coming around Taiwan Semiconductor, one of the biggest producers in the space. But we actually think that software like Microsoft, Adobe, that these are better ways to play that theme. And I worry a little bit in terms of a rise and fall around Nvidia. And I think yes, you're right, there was a major market cap add, but if you take your price chart on Nvidia back more than 12 months, I think what you see is a share price characterized by a ton of volatility, and in particular, if AI has a bad day, or if we find that value accretes, further downstream, maybe to software makers, maybe to businesses that are able to become more efficient because they're using AI. It's yet to be known for sure how AI will unfold as a theme, how that affects companies more broadly. And so for us, I mean, to me, Microsoft is a better way to play AI than Nvidia. We do own chip makers. We like Broadcom in the States. We like Taiwan Semiconductor. Mostly we like ASML, which is a European-based chip manufacturer, supplier. So they're even further upstream, and they're doing some very interesting things in terms of equipping chip makers to be more efficient in the chips that they produce. So, I think that Nvidia is just a little bit too obvious for me. I think that there's other ways where you can see better value.
I'm just for our viewers, I mentioned the most added in market value. I said it was over 250 billion. The final number is 277 billion in value, which is the most in market history. We got to be accurate, but that that's a lot of oxygen and value that just accrued in 24 hours. And I look at our market, and we're close to all-time highs. We're about 3% from all-time highs, but it's really sideways, right? It's been sideways for about 2 years. Is there anything that gets you excited about either our tech sector, Celestica popped today, or just other parts of the market that are value, that are dividend oriented, that are maybe just don't have the same sort of story or historical story, but that are still worth taking a look at?
Absolutely, there are. My advice, though, I think, for anyone who's looking to get invested into tech, but is Canadian, so doing that from a Canadian perspective, is you got to be a little bit careful. To be excited about tech in Canada, you got to have a short memory. Whether it was Nortel, BlackBerry, Shopify, it's been quite a striking feature, all things considered, the ability of these businesses to ramp up so quickly and then implode. Shopify was the latest Canadian name, and I've been repeatedly in media and past appearances on the show talking down Shopify, and I've said as much as that I'm quite proud not to have owned it. I think There are, however, in the Canadian landscape.
Why do you talk it down? Because it's such a, it has such a strong structural growth story attached to it. You know, the digitization of everything else that's not on Amazon.
Yeah, so I mean, digitization as a theme is a great theme. You know, Shopify was all about equipping, you know, online stores, especially early in the pandemic. To us, there's not that much proprietary about it, and as much as they try to build an ecosystem around Shopify, they were unsuccessful doing that. There's lots of ways to bring products online, to sell products online. Amazon, who you mentioned, is a whole other ecosphere that people can participate in. So it's just not proprietary enough. And it's not a question about whether we're talking down Shopify. We talked down Shopify and we were right. And so my point is, if you're investing in, call it the flashiest thing in the Canadian tech sector, I think that can be an exciting thing for a while. You mentioned Celestica. Hitting 52-week highs. I mean, Celestica is up over 200% in the last 12 months. Like, no question, that's a great company to own. But you also mentioned that it's not an all-time high, because the all-time high was struck back in 2003.
That's right.
So look, I'm not an old-timer for sure, but I've been at this for almost 2 decades now, and I'll say, you know, and I own shares in Nortel. I was in high school, and so that was burned into my mind that sometimes jumping after the next best thing is just not a recipe for wealth creation. So where do you go? Well, I think as a Canadian, there's really 2 levels of decisions that you're faced with. One is, do you want to be invested in the U.S. markets? And I think, of course, the answer to that is yes, but to what degree? There's lots of great companies there, lots of different sectors. The reason that Canada hasn't regained all the losses since 2021 is because we just don't have the same weighting to tech where all the action is being as they do in the States. So whether you buy a U.S. index ETF, which we think continues to make sense, particularly if you're a do-it-yourself type person. But as I mentioned, there's some great companies there. We just don't have those types of companies in Canada. There is no Microsoft or Adobe or Nvidia or Broadcom. Yeah. Those companies don't exist here. So then the question turns to, okay, well, so you've got your US portfolio. Now you're looking at your Canadian portfolio. Where do you go? There are some very good tech companies here in Canada. They're just not as interesting. They're not as AI oriented. We like CGI. We like open text. You know, these are businesses that are in the software theme. They play heavily to the digitization theme, but they're reliable. They're growing businesses. And if you're looking for more AI-oriented names, I'd say today is a day that those names stand out. And Celestica is up over 10%. For sure, that's because it's taken on this sort of moniker of having being an AI beneficiary. But I think there's a way that Canadians can invest in tech and by owning some of the more blue chip software software developers like CGI. I think it's a little bit less exciting than Nvidia for sure, but I think over time there's every bit as much opportunity as there is kind of the flavor of the day, which is chip makers around this AI theme.